Unfortunately, students, I've already didn't came to know this link got disconnected. Then eventually I ended up many of the theoretical particular case studies. So students, so I was engrossed in the explanation that I never came to know that the link got disconnected. Anyway, friends, I'll again redo this theory with all of you. So I was talking about, students, double taxation are of two types over here. And what are those two types? Economic double taxation, and the another one is a juridical double taxation. Now, when you talk about these two double taxation, one is the economic, another is the juridical double taxation. What does exactly it mean, students, over here? I gave you the fact that students always have the habit of writing a theory in this case. And the theory in this situation should be written smartly in this regard. Now, what you should do, students, is this, that first you should always try to answer it in the question, students, when the question is about, this is a very popular question, explain the juridical double taxation and the economic double taxation. Very popular question. So first, students, you explain the juridical double taxation and then you go to the economic double taxation. That is what you should be dealing with it. First, explain what is a juridical double taxation and then you go to the economic double taxation. Now, while you explain the juridical double taxation, what you should be doing is, students, is that in a simple words, in a simple sentence, you should make the answer. First, explain juridical double taxation, simple words. And what is that? You have to explain that here it is a case where juridical double taxation happens. When juridical double taxation happens, when a person is a resident in a country, so therefore his world income is taxable, and he has earned an income. He has earned what, students? An income in a foreign country. He has earned an income in a foreign country, and therefore the same income is getting taxed in the other country as well. If this is a case, then such income is taxed in two different countries. Same income is taxed in two different countries. This is a juridical double taxation. Okay. Now you explain economic double taxation. How you explain economic double taxation? Now be careful. I told you to first start with juridical double taxation because you can write the answer. But for the economic double taxation, it becomes difficult for you to write the answer. And that's the reason why when you have to write the economic double taxation, you should write like this. Economic double taxation is a double taxation which is not a juridical double taxation. Economic double taxation is a double taxation which is not a juridical double taxation. Now you should write further. For example, now you should give an example directly. Don't write any further sentence. You will not be in a position to write it. So what you should do, write a simple example. For example, in the case of a partnership firm, the partnership firm pays the tax on its profit. The partnership firm pays a tax on its profit. The same profit, when it is distributed to the partners, it will result into what, students? Economic double taxation. Because the same profit, if it is distributed to the partner, will result into an economic double taxation. Now, you will write remedy. After you have written this thing, you will write remedy. The remedy to avoid economic double taxation is very much available in the Income Tax Act, that is in the form of exemptions. The remedy for economic double taxation is available in the Income Tax Act, that is in the form of exemption. So you can write 10(2)(a) exemption, where the share of profit received by the partnership firm is exempt. Now you write the remedy for juridical double taxation. What is the remedy? The remedy for juridical double taxation is given under Section 90 and Section 91 of the Income Tax Act. That is the relief, isn't it? 90 is the unilateral relief, 90 is a bilateral relief, and 91 is a unilateral relief. Okay, and you must write one more sentence. And what is that sentence? This remedy, however, is available only to a resident. This remedy is, however, available only to whom? To a resident. This is what is the statement that you should write. Okay, now students, only one point I must tell to all of you. As you know, the relief of juridical double taxation, which is under 90 and 91, is available to a resident. Now possibilities are equally very high that the ICI here also can become innovative. And how they can be innovative? They can target students. What they can target? They will tell you that this is an individual, his stay in India is for 182 days or above, or his stay in India in the current previous year is 60 days or above, and in the last 4 preceding previous year his stay is 365 days or above. So does he become a resident in India in that particular case? And the answer is yes. He does become a resident in India in this particular case. And because he becomes a resident in India, what is the final answer in this situation, students? Because he has become a resident in India, students, what is the answer in this situation? In this particular case, is he eligible for the relief in this case, students, under 1991? And the answer is yes. Why? Only a resident is entitled for the relief under Section 1991. Now students, one important theory is that of what is the purpose of the bilateral relief, that is a treaty. Now bilateral relief, students, for that you have to refer the treaty. Bilateral relief under 90, Section 90, for that, students, you have to refer the treaty. And in the treaty, students, what is the purpose? Purpose is to grant the relief from the double taxation. We all are aware. But one of the most important amendment that has happened in the recent past is this. And the amendment that has happened, that the purpose of the treaty is not only to provide the relief from the double taxation, but the purpose of the treaty is also to avoid the double non-taxation. They have to ensure that there is no double non-taxation that takes place now. This is also the purpose of the treaty, to ensure that there is no double non-taxation. Apart from that, students, the exchange of information and also for recovery of income tax. This could be a possible MCQ based question, students, a possible MCQ based question. So now gone are the days, students, you have to be analytical. Earlier we used to always have this example. What is the example? That a Mauritius resident has made the investment in the securities in India, and through that securities he has transferred it in India, and there is a capital gains earned in India. But as per the India-Mauritius treaty, no capital gain will be taxed in India, but it will be taxed in Mauritius. And what is the rate of tax in Mauritius? 0%. So what it is? It is a double non-taxation. It is what? Double non-taxation, neither tax in India nor in Mauritius. Now, does this opportunity will be existing now? Answer is no. Why? Because the purpose of the treaty is to ensure that there is no double non-taxation. The purpose of the treaty is to ensure that there is no double non-taxation. Is that part now clear to all of you? So this is one thing that you have to put across in your answer. Okay. Now, one important point, students, which is about the fact, even the GAR provision, students, the general anti-avoidance rule, you may be aware that the GAR provision, does it override treaty provision? The general anti-avoidance rule, does the GAR provision, does it override the treaty provision as well? To that the answer is again yes. The GAR provision very much override the treaty provisions. Okay, so that is the point which has been there in this regard. Now let's come to the this important definition. We will deal with it, and then we will look into the important area of foreign tax credit. Students, just keep in mind this particular part. Point number one, this theory all of you are aware. The assessee to whom such DTAA agreement applies, the provision of the Income Tax Act shall apply to the extent they are more beneficial to the assessee. We all know if the tax rate in treaty is 10%, under the Act it is 20%, then the 10% rate is what will prevail. All of you agree? Yes. If the Act says the income is taxable, the treaty say no, it is not taxable in that source country, it is taxable in the resident country, treaty will prevail. So if the treaty is more beneficial, treaty will prevail. If the Act is more beneficial, Act will prevail. All of you agree to this one? But one thing you should be very careful is this part, students. This part is an important one. And what is that? Students, if a particular term has been defined under the treaty, be careful. In the first lecture, I told you, LDR first lecture, I told you there was this royalty concept that came of computer software. The treaty defined royalty and the Act has defined royalty. If a treaty is defining a term, then it will always prevail over the definition under the Act. Again, I'm repeating. If the treaty has defined a term, then that will always prevail over the definition under the Act, which means that the Act in any case can never ever override the definition under the treaty. In any case, even if it is beneficial, doesn't matter. If the definition has been given under the treaty, then it will always prevail over the definition under the Act. But if there is no definition in the treaty and the term is defined under the Act, then whether the definition of Act, can that be used to do the interpretation of treaty? Answer is yes. If there is no definition in the treaty, but there is a definition in the Act, then whether the definition in the Act, can that be used to do the interpretation of the treaty? And the answer is yes. I hope that all of you are clear with this one. So just keep this particular point in mind. Now friends, before I go to this foreign tax credit concept, this is a one case study, students, which has been introduced based on the recent amendment. And this is covered in your RTP also. The same case study. Now I'll just quickly run through this example. In fact, I just explained in that link which got disconnected. I was explaining thinking that we are connected. Anyways. So now friends, this concept, just understand this concept because this case study is based on this concept. Friends, let's take two countries, India, US, and in the India, US, the royalty is taxed at the rate of 15%. And after India, US treaty, the next treaty which was entered was India, UK treaty. So say India, US 1990, India, UK say 1995. Okay. In the India, UK treaty, royalty is taxed at 5%. Royalty is taxed at 5%. Now US and UK, friends, US and UK both are OECD countries, OECD members. Now if US and UK are OECD member, then there is a concept of, students, there is a concept of MFN. MFN full form is most favored nation. Now what is this MFN concept? Like an example, so just take an example. Example is, supposingly I am a US resident and I have earned royalty income in India. I have earned a royalty income in India and I am finding that the royalty income in UK is taxed as per their treaty at 5%. So question is this, that whether a US resident, can he invoke India UK treaty to obtain the beneficial rate of 5%? Can a US resident invoke India UK treaty to obtain the beneficial rate of 5%? To that the answer is yes, if the following conditions are satisfied. Three conditions only, you remember it. Condition number one, both UK and US, both UK and US are OECD countries. That is first condition. Second, the India US treaty should be first and the India UK treaty which the US resident want to invoke should be later. Means the India UK treaty should have come after the India US treaty. So I am a US resident, I want to invoke the favorable treaty of India UK of 5%. So the India-UK treaty should have come after the India-US treaty. So that's condition number 2. And third and the most important condition is this, that at the time when India-UK treaty was entered, at that point of time, UK was already a OECD country. The third is the most tricky one. At the time when the India-UK treaty was entered, UK was already a member of OECD country. Which means that if the UK was not a member of OECD at the time when it entered the treaty with India-UK, UK was not an OECD country, then this concept will not apply. Means the US resident cannot take the favorable rate of India-UK treaty. They cannot do it. So therefore, what is the third condition? Third condition is that when the India-UK treaty, which is the second treaty, first treaty is India-US. What is the second treaty? India-UK treaty. When the India-UK treaty was entered, at that point of time, UK was already a member of OECD country. If this condition is satisfied, then yes, the US resident can invoke the India-UK treaty to obtain the beneficial rate of tax in that India-UK treaty. To obtain the beneficial rate of tax in that India-UK treaty. Is that point clear to all of you? So 3 conditions, again repeat with me. First, the India-US and the India-UK treaty. These are 2 treaties. So the US resident wants to invoke which treaty? The India-UK treaty. So the India-UK treaty should have come afterwards. Afterwards means after the India-US treaty, it should be the India-UK treaty. After the India-US treaty, it should be India-UK treaty. That's first condition. Condition number 2. Both the US and the UK should be OECD country. That is second condition. And the third and the most important condition is when the second treaty, which is India-UK treaty, was entered, UK was already the member of OECD country. UK was already a member of OECD country. So therefore, in the ICR question, they have given a twist. And what is the twist? The twist is like this, that at the time when the India-UK treaty was entered, UK was not a resident of, not the member of OECD. That is a twist that they have given the question. So at the time when the India-UK treaty was entered, UK was not the member of OECD. What is the answer? Therefore, we are going to say that this beneficial rate of 5% of India-UK treaty will not be available to a resident of US because the third condition is not fulfilled. This is exactly what they have given you in this case study. So just keep in mind, friends, this 3 particular criteria which is applied in this case study. Chances of this case study again is very high, not targeted in the earlier attempt, and that exactly is the point. With that, students, now we come to our rule of the foreign tax credit rules. Foreign tax credit. Now, students, you have to be very careful in this. Now, this is a short question, which is always the case. The relief calculation that you have to involve into it, isn't it? Now, when you have to calculate the relief, students, you have to always keep in mind one point, which is this. The foreign tax credit rules, students, is what you have to involve into it in this calculations. But before you involve the foreign tax credit rule, just keep in mind, first analyze the question. But keep the question in your mind. This is very important. Check, students. See, one thing we already discussed, the relief. The jurisdictional, the relief from double taxation. Which double taxation? The jurisdictional double taxation. The relief from the double taxation, which double taxation? The jurisdictional double taxation is available to only a resident. Okay. Now this resident, primarily be careful, the question will be, obviously, this resident has got some Indian income in the question, students, plus the foreign income. First, check in the question, students, what is exactly you need to check out. The foreign income, students, is it given in INR or foreign currency? Check in the question whether it is in INR or in foreign currency. If it is in INR, primarily 115, any case, rule 115, which I'm going to discuss it now, is not going to be made applicable. Rule 115. Because already it is converted amount which has been given to you. If it is in foreign currency, in this case, check whether, in this case, the TT buying rate of various dates given, whether the TT buying rate of various dates are given. Again, the answer is yes, or it could be no. If the answer is no, meaning thereby, what does it mean? That only single conversion rate given. Single conversion rate given. If only single conversion rate given, then that's it. And you know many questions are there wherein only one single conversion rate is given of foreign income. So you don't have to do anything. Again, when a single conversion rate is given, rule 115 is not applicable. So where is the rule 115, which I'm going to first touch upon? Rule 115 would be applicable over here when the foreign income has been given in foreign currency. The foreign income has been given in foreign currency, and also you have given various TT buying rate. So first and foremost is when you compute the total income, students, of this resident, whenever a total income of this resident has to be computed, total income of this resident, students, has to be computed. Whenever the total income of this resident has to be computed at that particular point of time, students, what you need to do is this. Be careful on this one, students. All of you just pay attention to this particular part. So whenever is the total income that you need to be calculating in this regard, you have to first ensure that the foreign income has to be converted into INR, which is going to be a part of your total income. Foreign income will have to be converted into INR, which is going to be a part of your total income. Now in the conversion factor, students, you need to pay across attention to this part. What is the conversion rate that you have to take? Just pay attention to this one. If you have got income, which income, students? Income like salary, interest on securities, dividend, and capital gains. These four income: salaries, interest on securities, dividend, and capital gains. For these four income, you will take the TT buying rate of the last month. TT buying rate of the last month. Last to which month? The month in which these income has become due or has accrued. So the month in which it has these four income has become due or has been accrued. So you will go to the preceding month, and of the preceding month you will take the last date TT buying rate. That is how you are going to do the conversion of these foreign income into INR. That is how you're going to do the conversion of this foreign income into INR. Is that clear to all of you? Now, apart from these four income, all the remaining income, students, how you're going to approach for the remaining income? Just simply you take, students, last day of the previous year of the SSC. So whatever is the TT buying rate of the last day, which are the other income, students? What is the other remaining income? PGBP, income from house property. So for PGBP and house property income, if it is in the foreign currency, then you will convert into the TT buying rate as on the last day of the previous year, which is 31st of March. So that is how you do the conversion. Now this is which many students will say, sir, which TT rate? It is TT buying rate. That's it. No average, nothing. TT buying rate on this particular date, you are going to do the conversion. This is how primarily the things has to be looked upon, students. This is how the things has to be looked upon, and that exactly how the things will be referred on. I hope that all of you are clear with this one now, every one of you. So first ensure that because why I'm saying so, all the varieties of the question have been covered by the ICI. The ICI has targeted this also. Many questions of the ICI is having only one single conversion rate for all the income, and you will find many questions of the ICI wherein the foreign income, they already give you INR. The foreign income, they already given you the INR. So if the foreign income, they already gave you the INR, do nothing. If the foreign income, they have given you the foreign currency rate, but there is only a one single rate applied on all, your job is solved. No 115. But in that one question, which was in their COVID attempt, they have targeted, wherein what has happened, they have given you multiple TT buying rates. At that point of time, you need to be very careful about which is that income and which is the rate that has to be applied. That's the only point of time where you need to be careful about it. Is that clear? So first, before you come down to the foreign tax credit as a relief, first you check the computation of total income, because here we are talking about the relief in the form of tax credit, but the tax credit is on tax amount. But before tax amount, you have to compute a total income. Chidru, first you have to compute the total income. So please first do compute the total income and then you go to the tax credit. So first total income, rule 115. Check whether it is applicable or not. If it is not applicable, then forget it. Do normal computation and come to the tax liability. And when you come to tax liability, you will now come to the foreign tax credit. And this is a very important particular point that you have to be very careful about it. And what exactly it is, students? Now see here very carefully over here. I'll again discuss that very difficult question which was targeted in that COVID attempt. Please see what they have said. Foreign tax credit, country for which it is available. Foreign tax credit, the country for which it is available. In respect of the country with which India has entered into DTAA, means section 90. 90 is section to be considered when the India has entered into DTAA. Okay. What they are saying? Taxes covered under that treaty. Taxes covered under which treaty? That treaty. That is what it is. Now, that is point number one. Now, point number B, in respect of any other country. In respect of what? Any other country. The tax payable under the law. What is any other country? First is the country with whom India has entered the treaty. What is the any other country means? With whom India does not have any treaty. With whom no treaty is there. No treaty means where is the relief? Which section the relief will go? 91. The relief will go under section 91. So in respect of any other country, the tax payable under the law in force in that country in the nature of income tax. In the nature of income tax. Okay. So students, just if you allow me just a minute, only a minute students, I will just put across before all of you in this context, students, one particular part which has been there over here. Just a second, friends. Just allow me a minute. Just after this is a matter of now only 3-4 days, you guys will be through with your examination. I understand that people are bursting the crackers and all across it. Very difficult time of CA examination, isn't it? Festivals are going around and you people are quite held up with this thing. Don't worry, students. Not these are not only the only sacrifice that you have done. You have also done the sacrifice of many sunrise and sunset also. There are other sacrifices also bigger than this. So all this will pass soon. Now students, in one of the examination, just without getting into the big loaded questions and all at this stage, there was a particular person. Now here in this case, students, he is in USA. The foreign country is USA. He has earned some income. So a resident in India, students, a resident in India, he has earned a foreign income in USA. Resident in India, he has earned the foreign income in USA. Now in USA, students, they are applying this tax. The tax in USA was federal tax, state tax, and social security tax. 3 taxes. on the income they were applying 3 tax. The third one is social security tax. Okay, these are the 3 taxes. And now they are giving you one Article 2 of DTAA. And Article 2 of DTAA says that the taxes covered for credit are federal income tax imposed by IRS. The taxes covered for credit are federal income tax imposed by IRS, excluding social security tax. So that is what they have mentioned over here in the question, that this is what students have been mentioned. So what they have mentioned, students, in the question. Students, the question that they are saying, Article 2 of DTAA, in this context, the taxes covered for credit are federal income tax imposed by IRS, excluding social security tax. Now you tell me, 3 taxes are given to you. Which tax is what you are going to cover here? Which tax, students, you are going to cover? In this case, 3 taxes are there. And Article 2 of DTAA has been mentioned to you that as per the DTAA, the taxes covered for credit are federal income tax imposed by IRS, excluding social security tax. What exactly you will be putting across it? In this case, students, it would be what, students? You would only be focusing on federal income tax. That's it. So this is what the ICS targeted in that attempt. Only the federal tax has to be considered in this case. Now, one part excluding one particular observation, you'll say, sir, but obviously they have mentioned it very clear. Federal tax has to be considered. So we will also consider federal tax. But understand one thing, state tax in any case is not to be considered. But then what is the impact of excluding social security tax? Why specifically they are using this term excluding social security tax? Why they are specifically using the term excluding social security tax? When I'm asking you the question that the taxes covered for credit are federal income tax imposed by the IRS, excluding social security tax, you people are saying, sir, consider only federal tax. I agree. But why they are telling you then excluding social security tax? Inherently implies that the federal income tax amount includes what? The social security tax amount. State tax, any case, we are not considering it. But why they are using this term excluding the social security tax? It means what? It means that federal tax does not include federal tax. If they are saying that it should be excluding the social security tax, it means that the amount which they have given to you in the question on the federal income tax, that federal income tax has the component of social security tax also. So do you know what you need to do? You need to then come up with what is the net federal tax, and what is the net federal tax would be after reducing this amount. This will be the net federal tax, and only of this net federal tax that the credit would be available. That is how it has to be considered. Because otherwise, one may say that I should argue this question. Then why not excluding state tax? They should have also written this when they are very clearly saying that for credit purpose it is only federal tax. I am considering only federal tax in that case. Okay. But why you are writing further excluding social security tax? Then you should have written further also, no? Excluding state tax also. State tax they are not mentioning. What does it imply? We are not taking state tax for credit purpose. It implies that in the federal tax, the social security tax is also a component. So therefore I will reduce the social security tax amount from the federal tax and come up with the net federal tax, and this net federal tax is what is subject to the credit. Is that point clear to all of you students now? Every one of you? This was the COVID attempt 1 question they have targeted in this particular case. And that's exactly how you're supposed to deal with it. Okay students, now coming back to this particular part. So therefore we are reading again this particular thing. So in respect of a country with which India has entered into a DTAA, in my example which we just discussed, taxes covered in that tax treaty. So in that, which was the taxes? Federal tax, but excluding social security tax. So what I did, I reduced the social security tax from the federal tax. That is what has been reduced. What is point number B? In respect of any other country, students, the tax payable under the law in force in that country in the nature of income tax. So in respect of any other country, the tax payable under the law in force in that country in the nature of income tax. Any other country, which means with whom India does not have any treaty. With whom, students, India doesn't have any treaty. Now eligibility to claim. Now what is the eligibility to claim, students? Only a resident can claim FTC. Only a resident can claim what? At the FTC. So that is point number 1. Point number 2, students, is the tax should have been paid in the foreign country. In this case, the tax should have been paid where, students? In the foreign country. So that is also another point which has been there. So this is an important one. Paid. It should not be a payable status. Okay. We already know that only a resident can claim an FTC. That is already known. Okay, foreign tax credit only to a resident in India. They will be getting the foreign tax credit, and that's the reason why I told you there could be again a googly question that they can target you. First, they want you to determine the residential status of the person. And so you have to check whether he stayed in India is 182 days or above, or stay in India is 60 days or above, and 365 days in the last 4 preceding previous year. If that is the case, he becomes a resident. And if he becomes a resident, will he be eligible for taking the credit? And the answer is yes. So see how the individual residential status can be twisted for that NRI question which we discussed in the previous video, or the foreign tax credit which we are discussing it right now. Credit should be claimed for corresponding income offered to tax. Obviously the foreign income should be a part of the total income. Only then you will be in a position to claim what? The foreign tax credit. The foreign income should be a part of the total income, and on that total income you have to calculate a tax liability, and then on that tax liability you will be eligible to claim the foreign tax credit. Now foreign tax credit, taxes for which it is available in the foreign country, it should be the income tax. Surcharge, if in the foreign country surcharge is levied on the income tax, whether that surcharge will also be subject to the credit? Yes. If in the foreign country on the income tax there is interest and penalties, whether that interest and penalties will be subject to the foreign tax credit under this calculation? No. Disputed foreign tax also will not be a part of the credit. Now this is an important one, students. You have to be very careful about the presentation part. Now if you see, students, there were multiple questions that we have also solved it in our class. And also, students, of the ICI question, if we have to discuss, this is an important part. Students, always keep in mind one thing. Compute for each source of income and for each country lower off. So it means that the credit that you have to calculate has to be source wise and has to be country wise. Now what I will tell you is this: how to read a question now in this case. Check in the question very carefully the data which has been given to you. In the question, students, it should go something like this. Variety of questions, students, the variety of question. So in this case, generally what will be the question, students? You should be very clear about it. The variety of question. Now visit more than one country. Is it more than one country, students? Answer can be yes or it can be no. If it is yes, students, more than one country, I will tell you what exactly they will target you in the exam. They will not make the question lengthy, otherwise this question will become very lengthy. They will not do this. If it is yes, so you will calculate country wise FTC calculation. Country wise FTC calculation separately you will have to do, students. Separately you will have to do. And if the answer is no, means there is only single country, only one country. Now you will check, students, one thing. What are you going to do? More than one source will be there. More than one source will be there. And you check in this case whether what, students? Whether whether more than one rate, more, right, like this, whether different tax rate in foreign country for these sources. So if there are different tax rate in foreign country for these sources, again the answer is yes or no. If the answer is no, or it could be yes. Now you have to be careful. If the answer is no, then you will determine net total foreign income, included in the total income. Net total foreign income included in total income, which means that you will aggregate, and on that provide the relief. Provide the relief. So determine the net total foreign income included in the total income. You do the aggregate and then you provide the relief. If the answer is yes, in this case, so here I'll give you the, we'll do the question. I'll just give you the numerical question also quickly. We'll discuss it and we'll finish it on this. Instead of referring to those big questions. If this is again come back to the question. If whether different tax rate in foreign country for these sources, if the answer is yes, then for each source, for each such source, compute the credit separately. Now this question, if somebody has referred at our booklet, it is of Mr. Patel and this is of Miss Amruta and Miss Amruta and Mr. Kalpesh. These are two questions. Now students, always keep in mind this particular factor. So if 90% of your question, students, will be having, just check directly in your question. What is it for foreign income? Just check directly. Is there only a singular rate applied on all the source? If that is the case, your job is easy. What do you have to do? Whatever is the foreign income, students, you will take, or students, in this case, whatever is the foreign income, students, you will take in this situation what? You will take the aggregate of all in this situation. Aggregate. Now there could be a loss from the foreign country also. Now please pay attention, students, to this concept. They will give you that there is a loss from the foreign country. Okay. Now, whether the loss from the foreign country, will that also has to be considered under the income tax law? Answer is yes. Why? Because we have got set of rules, and our set of rules does not allows us full set off except for some restriction. There are some restrictions of set off which we know, like speculative loss can only be adjusted against the speculative income. Specified business loss can only be adjusted against specified business income. So there are some rules, but other than that, the other foreign losses which are being given to you, they are eligible for set off. Answer is yes, they are eligible for set off in this situation. And because that they are eligible for set off, students, you will do the set off as given to you in the question. I hope that all of you are clear with all this particular part in this case. So do the set off, students, of these losses primarily while you do your total income computation, so that once the set off is done, now you check what is the final net foreign income which is included in your total income, on which there was double taxation. So what is the net foreign income included in your total income on which there was double taxation? And on that net foreign income, provide the relief. Now the relief will be on the basis of Indian rate or the foreign rate, whichever is lower. The relief would be on the basis of Indian rate or the foreign rate, whichever is lower. Is that point clear to all of you? The relief is on the basis of the Indian rate or the foreign rate, whichever is lower. I hope that all of you are clear with this particular point. So this is how the relief would be granted to you. Now this rate, eligible rate, apply it on that net foreign income included in the total income on which the double taxation has been charged. That is what you have to deal with it. I hope that every one of you are clear with this one. Okay, but if the rates are different for each of them, students, if the rates are different, as it was the case of Mr. Patel, then for each of the particular, from each source, students, each source, whatever is the net income from such source, which is included in the total income, on that each source provide the relief. On such each source provide the relief, and the relief would be again the same Indian rate or the foreign rate, whichever is lower. The Indian rate or the foreign rate, students, whichever is lower, that is how the relief would be granted. I hope that every one of you are clear with this particular point now. Each one of you, students. So this is how the things has to be looked upon. So just keep in mind, first in the double taxation relief question, check out this particular factor. If there are two countries that they will give you, I'll tell you, for each country you will do this particular exercise. Which exercise? The foreign rate of that country will be compared with the Indian rate, and the lower of the two rate is what will be applied on the net income. The net income of that country which is included in the total income. The net income of that country included in the total income. So if there are two countries, you do this exercise. Take the lower rate, apply it on the net income of that country which is included in the total income, and on that basis you will get the relief calculation. Okay, that will be simple. If it is only one country, check out, then you will check whether for every source there are different rate or there is only same rate. If it is the same rate, whatever is, do the aggregation. Then what is the net foreign income finally, which is included in the total income, and that net foreign income included in total income, apply the lower of the two rates. But if each source has got a different rate in the foreign country, then what you will do in this case, for each source, then students, whatever is the net income from such source, each source you will take and include in the total income. Whatever is included in total income from that source, that net income, apply the lower of the two rates. That net income applied on the lower of the two rates, and that will give you the relief from that particular source. Another source, do the same exercise, calculate the tax liability, and that's exactly what you will have to do it. Again, students, one very important point I must tell to all of you is that the stage in which this calculation has to be done will be after the HEC. because this Indian rate, what is this Indian rate? Indian rate is the tax liability till HEC. Tax liability till HEC divided by what? Divided by the total income. Divided by what? Divided by the total income. This is what will be. Be careful, the relief calculation will be after the HEC. That is one point you should be very careful about it. Okay. Now students, these two questions I'm just putting across to all of you. Do this question of one Mr. Patel, which is for singular, and one of Mr. Amruta, and that should be all. And this is what probably you need to wrap it up in this case. Foreign tax credit is only this much. I've summarized the entire permutation combinations for all of you, and that covers up your entire spectrum of this particular case. Now students, what is now left, which I'll now let you know after this 3 sessions which we have discussed over here, is this particular case of the business connection. The business connection, students. Now in the business connection, students, primarily there are 2 things. One, in this context, the dependent agent concept. The business connection in this case, it includes and it excludes. Business connection, it includes and then it excludes. All of you agree to this one? The business connection includes something and it excludes something. All the exclusion, students, you will have to deal with it one by one. All the exclusion, students, you will have to deal with it one by one. 5 exclusions are there total. And in each exclusion, students, one word that has been used is confined to, restricted to only that activity. Which activity? Please take that particular page of business connection, wherever you are referring to. Only that activity. Which activity? First one, the activity of purchasing for the purpose of export out of India. The activity of what? Purchasing for the purpose of export out of India. That is the first one. The second activity, students, which has been there in this particular context, which has been the case of shooting of the cinema films. So activity which is restricted only to shooting of the cinema films. That is the second particular one. The third activity, students, happens to be the taking the news from India for the purpose of transmission out of India. In this case, so activity is restricted to taking the news from India for the purpose of transmission of the same out of India. The fourth activity, students, is an important one because this is an activity which is applicable only in the case of this person. The person who is engaged in the business of mining of diamonds. Business of mining, students. Mining of diamonds. And that person who is in the business of mining of diamond, he is showing the diamond for exhibition purpose. So if that is the only activity which this person who is engaged in the business of mining of diamond, which activity is done? The activity of showing the diamond in exhibition. If that is what he has done, then even that would be considered as an exclusion. And the last one is the very important exclusion, students, is the license office. Is the license office, students. In the case of license office, students, which has been there in this situation, students, in the license office, what is the situation? In the case of license office, students, the license is only for the preparatory and auxiliary work, students. That is it. These words are very important. For license office, only preparatory and auxiliary work. Only preparatory and auxiliary work. In one of the examination question, what these people have done, they have told that they have used the word license office. But you know what this license office was doing? Are you aware of that? This license office, students, was also engaged in multiple activities. And what was that multiple activities that they were engaged in? The multiple activities, now I'll tell you, students, what they were engaged in. They were engaged in the activities of point number 1, in this case, contacting the agent, contacting the buyer in India, negotiating the terms of agreement with the buyers, and placing the orders to the non-resident. So if this is what the license, preparatory and auxiliary means like call centers, like in this case, like small activities that they do. So preparatory and auxiliary has very small activities. So if they are extending the scope beyond that, if they are extending the scope students beyond that, then that scope will never be considered at all in this context. That scope will never be considered at all in this context. I hope that all of you are clear with this one. Okay, so therefore just keep this particular point in mind. So preparatory of auxiliary is only excluded from the business connection. They are only excluded from the business connection. Beyond that, students, beyond that, everything else is a part of your business connection in this regard. Beyond that, everything is part of the business connection in this regard. Now, so far as the include portion is concerned, the inclusive side of the definition is concerned, there are two things which has been there over here. And which are those two things? One is a dependent agent. One is the activity of dependent agent, and second one, students, is the activity of significant economic presence. Business connection include that of dependent agent, and another is SEP. What is SEP? SEP means the non-resident may not have a physical presence. Be careful, but just check in the question, even without a physical presence, just check whether it is hitting one of the two criteria. Which two criteria? The consideration received from person in India. How much is the consideration amount, friends? Is greater than rupees 2 crore. For supply of goods and services, the non-resident is receiving the consideration from whom? From person in India of more than rupees 2 crores. Or what, students? The second one, students, if like app, I give you the example, app and all, those who have number of users, like app example I gave it to you, Netflix example, number of users, how much are they? Minimum 3 lakhs. So number of users who have downloaded your app, how many people who have downloaded Netflix app? 3 lakhs or more. Don't only use our Netflix, anyone. So in that case, number of users with whom you are interfacing, with whom you are interacting through the app, how many are there? Indrakshi, 3 lakhs or above. So if that is the case, students, then can we say that you have got a significant economic presence? And the answer is yes. Dependent agent, students, means what? Just remember one important point. Dependent agent, students. Only one important point. So far as dependent agent is concerned, in this case, students, only one important point, students. And what is that, students? In the dependent agent, that important point that is to be considered is this: whether that agent mainly or wholly on behalf of non-resident, whether that agent mainly or wholly on behalf of non-resident is playing a principal role. Is he playing what? A principal role. That is what you have to only concern. Is that agent who is acting mainly or wholly on behalf of non-resident, is he playing a principal role which leads to the conclusion of the contract? And if he is playing a principal role which leads to the conclusion of the contract, we will say what? That yes, that this particular agent, primarily students, this particular agent who is a dependent agent, this particular agent, students, who is a dependent agent, primarily give rise to a business connection to the non-resident in India. That non-resident, because of this agent who is a dependent agent, is giving a business connection in India to that non-resident. Okay, just keep this particular point only in mind. Only remember this. This is only going to come. But there is a concept of independent agent also, students. You all are aware. Independent agent also, students, all of you are aware. What is the concept of independent agent? So far as the concept of independent agent is concerned, students, it means that he is acting in the ordinary course of business. What is the word that has been used? He is acting in the ordinary course of business. Means he is not mainly or wholly acting on behalf of a particular non-resident. He is not mainly or wholly acting on behalf of a particular non-resident, but he is acting in the ordinary course of business, and he is buying and selling the goods of the non-resident. And if that is what he is doing, just check in the examination these words are, or in the ordinary course of business. Or they will use the word, he is not acting mainly or wholly on behalf of the non-resident. Whenever these words are being used in the question, ordinary course of business, not mainly, not wholly, if these are the words which are being used, it means it's an independent agent. And because of the independent agent, you will not have any business connection in India. You will not have a business connection in India. Is that point clear to all of you friends? Every one of you? And that exactly is the point friends. This covers your business connection in entirety 911, which has been dealt with it. So friends, now with this 3 videos I have completed this one. Only one last one friends which is left is indirect transfer. Indirect transfer students, if you allow me, maybe in my next session I will be doing one practical question on Barbara NC dot. Practical questions on Barbara NC dot. And I will wrap up this particular part. Okay, one practical question on Barbara NC dot, and I'll then wrap up this particular part. Or else if you're dealing with it at your end, you can also deal with it at your end, and that is what it is. I'll just put across a particular small recorded video, which if you want to see it, you can see it. I will not take across this particular one live, and this is what it is. So this covers up this international taxation part. Now students, one chapter which is transfer pricing students, which has been there. Yes Nidhi, I'll do this. Barbara, we can means you can do it, or you want me to do it. Transfer pricing students, which has been there. I will request all of you, see the transfer pricing particular area, everything is important. All are important in the TP area. And I don't think there is any difficulty in understanding now any TP provisions which are being there in this case. But if there is any area students you want me to touch upon, you can just let me know on the transfer pricing area which has been there. Please do let me know on the transfer pricing area if there is there. Another is, yes, I'll say that thing once, not an issue then. GAR, General Anti-Avoidance Rule, and the last one is the theory of international taxation. Fine, 2 or 3. So, theory of international taxation students. Now, these two I'm going to do exclusively. These two students I'm going to do it exclusively in this context. So, these two I'm doing it exclusively. Yeah, theory I'm doing with you and GAR. So that entire 30 marks students we are covering. Now, you will say, sir, any, because some students are asking, sir, any particular exclusively in the LDR. I will cover. Now, you will say, sir, now with international taxation, the 3 videos that you have put up, what are the extra questions that we have to do? Extra questions, there are no such extra questions that you have to do, only in the double taxation relief part. Because then I will also, since you have told me indirect transfer, I will do the practical question of Barbara NC dot. Only one thing students, then in this case, practical question students, I'll just put it, you don't wait for it for a live, I'll do it, don't worry, I'll just complete that particular part. I will, while I'll do indirect transfer, I'll also cover up in that video itself, this taxation of non-resident sports person. There are small things are there on the practical part. I'll just cover that small areas also, so that area also get covered. You don't now refer anything on this one. In this context, GAR and theory, I will be dealing with it. Transfer pricing students, I will recommend to all of you to get started now, immediately. Because transfer pricing, technically speaking, is nothing but, any case, there's not difficulty in the transfer pricing topic. Only thing which has been there in this regard is that what is important is that, first of all, in this case students, are the methods of ALP for the practicals. Methods of the way you have to start is methods of ALP first. Do first methods of ALP, all the practicals. The second one students is the APA. No, not APA, sorry. The second one is the remedy. What is it? Yeah, APA, Advanced Pricing Agreement. Advanced Pricing Agreement students. Third is the secondary adjustment. Fourth is thin capitalization. This is the sequence, students, that you have to do. 4 things. 4 points, students. Immediately, students, you do this particular 4 points, and rest of it, like definition of this associated enterprise and all, you can do it later on. When later on means you can do it primarily later on also, not an issue. Just this 4 points, students, you have to do it and finish it off, this part. Please try to do this one. And if still there is something which has been pending, because why? This is something which you need to read it across. And therefore, that is your involvement which is there very importantly, students, in this case. Now, apart from that, in the LDR video, what I am going to cover up is the TDS and TCS. And finally, one on trust taxation. And last, students, would be assessment of companies. Apart from this, students, any area you want me to cover it up, please do let me know, because what I will be doing it thoroughly with all of you, so that I will ensure that there is nothing which is left unturned which has been there. Please do let me know, students, any topic that you want. Apart from this, I have told you TDS and TCS I am going to cover up. I will do all the justice in terms of RTP, whatever is the questions to be referred. ATR means what? PGBP, see, if you want that PGBP list of important sections also, see, at least I've told you, students, TDS, TCS, trust taxation, assessment of companies. These are the 3 areas which I'm going to cover. I'm not going, what is assessment of companies? Is the alternate tax regime. This is alternate tax regime only. Assessment company of alternate tax regime, that is one and the same. I've also, if you see the PDF which I've shared, I have got also practical questions in that. So students, this is what I'm going to do, but I want all of you to immediately start with transfer pricing 1 and the 2 practical questions. 2 practical questions. One is at Patel, another is of Kalpesh and all. Please don't do indirect transfer. Don't do this right now, this assessment of for this foreign sports person and all. And any other small miscellaneous area is there. These are the areas which I'm going to cover it up, students, in this particular context. Okay, so students, now I'm going to meet you. Ajo, okay, Ajo is saying capital gains. Okay, Ajo, for capital gains, do one thing. You people don't see the live lectures, but this capital gains, he has said that partnership assessment. And our theory, what else is remaining, Hitesh? After that, whatever partnership assessment. If capital gain partnership assessment is what, students, you want me to deal with it, in this case, I will be dealing with it only day after tomorrow. Only day after tomorrow, students. So what I'm going to do, students, now would be this. Day after tomorrow, one session I'm going to keep it for this. For 1 hour, I'm going to keep it and I'm going to finish it off. So if you want to, don't want to see the live session on that, it is fine. You can see a quick recording session, that is okay. So what, students, you will do is that we will meet up tomorrow morning at 8 AM. Okay, now first, in this case, I'm going to target over here the cases of the GAR provision, theory of international taxation, plus assessment of company and alternate tax regime. Tomorrow morning, students. This 3 is a target for tomorrow morning slot. Then, students, what is going to be left would be TCS and TDS and TCS and trust taxation. Students, that will be, I will be doing it maybe in the evening tomorrow, say 6 o'clock or so. I'll be dealing with this particular part. So please leave it to me. I'll do it a good job on this one. Don't worry about this one. Practicals and all, whatever has to be covered, I'll cover up on that. And after that, anything which has to be balanced out in this case, that will do it. Now, accordingly, you plan on this particular part. My suggestion to all of you, now plan in this particular way that all the remaining topics, so capital gains, students, I'm not going to do tomorrow, that I'm going to do day after tomorrow. Why? Because when I will be doing it, will have to again quickly run through some questions. If at all there are something which I have to consider it, I will consider that and I will put it so that there is no such thing which is left for you. So that 1 hour session you don't see live, you may see recorded, but you see it therefore tomorrow morning or so, and you can finish it off in that way. Hi Shudhate, I'm doing good. Happy Diwali now. CA prefix, the difference now it is there. Anyway, so students, I hope that all of you are clear with this one. So tomorrow morning 8 a.m. we are meeting for what, students? GAR, the theory of international taxation, and assessment of company including alternate tax regime. When I say assessment of company, it will include that MAT plus that 115 BAB, 115 BAA, including the practicals. Only suggestion, students, my humble request, cooperative society assessment, that 115 BAD you are talking about it, na? That cooperative society assessment, I can tell you there's one in MTP. Just I have given you one practical, I did it. Only do that practical. Cooperative society assessment is done and dusted in that. Beautiful practical question is there, which we have discussed in this MTP. I can just tell you that thing tomorrow or maybe tonight. But tonight, students, I just want all of you to do the transfer pricing in this case. Ayan is saying assessment procedure. Assessment procedure, I can only do updated return. And 147, 148A, again the same practicals. That I will... Ayan, if you want me to do assessment procedure, I will do day after tomorrow in the morning session. So day after tomorrow only. Search and survey. If you people want me to deal with it, then that I can do day after tomorrow morning session. Assessment procedure. Okay. That is what. So therefore, those who want search, that survey, search, and that technically speaking, survey, search, and 147, they are all connected. So that will have to go at one go. And thereafter, this updated return is another thing, which will leave with you, Nidhi, which will leave there for tomorrow. Appeals and revision. So if at all you have to do something earlier at your end, at least do appeals, revision. Appeals and revision, at least you do, and penalties. Appeals, revision, and penalties. If you're planning, then you plan in this case, in this context. Okay, so that is one thing which will be dealt at your end. So students, right now, students, what you're going to do? Immediately what you're going to do? Transfer pricing and the 2 questions on that. And if after that also you have got some time, you please invest in your IDT paper as well for 1 hour or so. IDT, maybe some FTP or customs, you can use it. And then tomorrow morning we'll catch up 8 o'clock for the topic on GAR, theory on international taxation, plus the assessment of companies and alternate tax regime, that particular part. Okay, so see you then tomorrow students morning at 8 o'clock. Yeah, again I'm repeating, appeals, revision, and penalties, students, you will have to deal at your end. I will cover up updated return, search, survey, and that 147, 148 linkage. Okay, in this case PGBP, let me see, because see, PGBP tomorrow late in the evening, students, trust taxation and this TDS and TCS are very important. Let me first get done with this one, and then maybe we'll stretch tomorrow then in the evening for PGBP and the other topics that you people are referring to. Okay, for that I'll stretch it up in this case, but let me first finish up this TDS and TCS and trust taxation tomorrow afternoon. I'll touch upon, well, I will start on TDS, TCS and trust taxation tomorrow afternoon, or tomorrow evening I'll touch upon TDS and TCS and trust taxation. We have to finish off that perfectly well, and then same time tomorrow night, then PGBP. But PGBP, what I'm going to do, I'm going to take, if you want me to take, only the sectorial part. That is the 33AB, those other things, the other particular sections which are being there. 35 AD and all those stuff, those only things which I'm going to do there. Tomorrow morning 8 o'clock. Tomorrow morning 8 o'clock. I'm meeting you for this. So tonight, friends, immediately transfer pricing. After that, you people will be doing IDT. If you want to have your other customs and all, which you want to do small areas of IDT. And then tomorrow morning 8 o'clock, let's catch up for this one then. Fine, students. See you then tomorrow morning, students. Take care. Profit link deduction, that is what it is. That same thing. Sectorial comes with all the profit link deductions and everything which you're talking about it. Perfect, students. Thank you. See you then tomorrow 8 o'clock.